So we recently had the interest rate lowered in the US. I understand we were just on panel, and I understand that's not across the board for other family offices, but for US family offices, it was welcome relief, especially that it wasn't still going up. We had anticipated that there would be another interest rate cut this year, but the jobs report just came in. So I think we're going to be wishing and hoping, and that's not going to really happen. Inflation is down, so gas is down, grocery prices are down. They wouldn't have cut the rates. In US, they don't cut the rates unless the inflation's gone down. However, there's going to be a real lag. It's not like they cut the interest rates, we throw a party and everything's great again. Unfortunately, there are still a lot of properties underwater. That's not necessarily a reflection of borrowing so much as we're still coming out of COVID. Certain types of assets, commercial real estate, people have not returned to the office. So there's a lot going on there that isn't related just to the interest rates. It's going to be a while yet. So Elle Family Office kind of invests in a different way. We invest in all real estate except industrial. And I'll get to the infrastructure in a second, but we do invest in commercial real estate. We don't convert it so much as we take it down and replace it with multifamily housing, townhomes. We do covered land plays, assemblages. So for us, this distressed market has been really great, but there are some commercial empty businesses. There have been a lot of new investments, at least in southeastern US, which are putting data centers into these vacant buildings as opposed to building new ones, and then combining them with like 10-year leases for big companies, Oracle, Google, Amazon, those kind of things. So we're starting to see a real merging of the two, which I think is fabulous. And we'll see where that goes. I don't think this is played out yet. I don't think we were at the end of that story. Well, again, it's not anything anybody hasn't heard before, right? Real estate is location, location, location. It is very different here in Europe and UK and even New York and California. What we have in southeastern United States is the ability to, in the regulation, to change things to kind of suit the investors, whereas you're under a lot more restrictions in other parts of our country. So again, it hasn't played out yet, but I think what we're going to see is a consolidation into existing CRE, and then the excess commercial real estate we're going to see taken down. And I don't know how that's going to play with the infrastructure. I really don't have an answer yet because it's very much in flux. We had different answers before the interest rates came down. Now we're all kind of in a wait and see. What are they going to do by the end of the year? Will the election make them hold off? I don't know. If I had the crystal ball, I'd be a billionaire. So it has not passed. The title of our panel was, "Are we out of the woods yet?" No, we're not out of the woods yet. The family I work for, we invest in distress. So we're still buying notes. People are still approaching us. We have this asset that's under the water. We have this distressed note, with the property. Would you like to pick it up? So there's plenty of opportunities, which tells me we're not even close to coming out yet. 50 basis points isn't going to save anybody who's underwater, unfortunately. We also have lags in spaces where it's very hard to get debt on hotels, even though hotels, I think, you've experienced a little over-tourism here in Europe this summer. We still can't get debt on hotels. And we were talking about that on panel today, why that is. So we're lagging a lot. This is not going to be solved soon, and it's not going to be easy. Well, I think you really have to look at where are you looking, and that's going to determine the asset type and what type of return. Is it an asset that really needs to be torn down? Or is it an asset that can just kick off returns? Now, most families, and I'm not speaking for all families, they need returns. They're not looking to get involved in something where it's going to be 10 years before they get their money back. So they're still looking for returns, and that leads you to think, multifamily housing. Multifamily housing is still a pretty good buy. You invest, you get a return, and a lot of families like that. So I think you really have to determine the best fit for your family and the best location to get that fit.